it. We gon' make it. We gon' make it. We gon' make it. We gon' make it. Hey, what's up, people? Your boy Trader Guy here. What's it, Thursday? No, it's Friday night. Oh, it's a Friday night. Oh. Yeah, anyway, I do my podcast all 5 days, Monday, Tuesday, Wednesday, Thursday, Friday. It doesn't matter. All right, so we're gonna continue our lessons from the last couple of days, talking about technical analysis, how technical analysis can be applied to any type of market. So the first day we did support and resistance, and people, as we say constantly, just listen to the terms. When it's on the price point support, that means the price is being held up. When it reaches a price point of resistance, that means the price is getting pushed back. So other than that, that was the previous lesson. Then last night we went over Japanese candlesticks, and as we went over, there's four candlesticks. They've been around since like the 1600s. There's all types of candlesticks. Let's do the screen share real quick. Let's go over that lesson again. Let's see. Let's see here. Yeah, so just to recap last night's lesson, the candlestick has four parts, as always: the open, the close, the high, and the low. Now, the open and the close, as we covered yesterday, that's the body of the candlestick. The high and the low are the wicks or the shadows, because you imagine this is a candle, and that's the wick coming out of each end, the top of the bottom part. And as we know, there's two type of candlesticks, either bearish, which means down, or bullish, which means up. And we went over the four most common. Well, in my opinion, these are the most common. Like there's all types of candlesticks, like hundreds, literally thousands of them, different type patterns. But the most common ones is the doji, which is basically it's a cross. As you see here, there wasn't that much movement throughout the day. The open and the close, it was very low. I'm sorry, the space between the open and the close, it was low, so there wasn't too much movement. It was like a lot of indecision. Like the bulls and the bears couldn't decide. Then also the hammer stick and the shooting star. And also, matter of fact, the ones down below that, the pin bars. Basically, with these candlesticks, if they're spotted in a trend, that means that the trend is similar to N. That's like, I cannot stress this enough. But technical analysis is all about pattern recognition, spotting the trend, spotting the patterns that's about to happen. So when you start seeing these pin bars, shooting stars, these crosses, things like that, you'll start noticing that a trend's about to end. Whether it's an uptrend, you'll start seeing them at the top of the chart. You'll start seeing the cross or the pin bar or the shooting star, which indicates that the uptrend is starting to peter out and is starting to come back on the short side. So when you understand these candlesticks, you can understand a lot the easier part of technical trade. That's like the first part actually. That and then the support and resistance. So we move on to tonight's lesson, which is the moving averages. Basically, there's two types of moving averages. We have the simple moving average and the exponential moving average, the SMA and the EMA. Basically, with the moving averages, it's like, all right, so an average, you just add how many numbers of a category and multiply by that number. I'm sorry, and divide by that number. So like moving averages, they're basically the most common ones are 20, 50, 100, and 200. So you would just basically add the closing price of the last 20 days and divide by 20, and now we give you the moving average of the last 20 days. Correspondingly, for the 50, you would do the last 50 closing prices. For the 100 and the 200. That's basically for the simple moving averages. Go back to the screen share. And like I say, there's the simple and the exponential. Now, the exponential is a tad bit more complicated than the simple moving average. Yeah. All right. So as we said with the simple moving average, that you take the last 20 days or 50 or whatever time frame, you take the closing price and divide by that number. The EMA uses the same basic format, but the time frame is constantly moving. Whereas with a simple moving average is day 1 through 20. All right, so the 20-day EMA, it would start with day 1 through 20, then it goes to day 2 through 21, day 3 to day 22, which means that it's always going to be a 20-day average, but those 20 days constantly change. So every day the average will actually move on the EMA because it's like dropping off a day, adding on a new day. So that means that the average will always, it won't ever be the same. I mean, and that's by chance that the closing price is the same in 2 or 3 days in a row. The EMA might stay the same, but other than that, the EMA is constantly moving. All right, I'm sorry. Scroll back up. All right, so as we see here, the moving averages, they actually give you strong signals if you know how to spot them. So we're going to talk about the two most famous crosses in the MA in the moving averages. We have the when the 50-day crosses above the 200-day, that is known as a golden cross because that means that a bullish trend is about to happen. Whereas if the 50-day crosses below the 200-day SMA, it's the ominous music. It is known as the death cross. So the death cross means that a bearish trend means that the price is about to drop down. All right. So as we see here on this chart, when it crossed right here above, that was an uptrend. When it says here, when it came for the death cross, you see the 50 is the slower one, came across right here below it. Prices just dropped. Now, my guest, he was supposed to talk about the moving averages, but he didn't show up last night, so he kind of got me winging it. Now, the moving averages, I actually don't use them as much in my price action system. I stick to other indicators, but the moving averages are very good things to use. So again, the most common days are the 20-day, 50-day, 100-day, and 200-day. And there's two types of moving averages: the simple moving average or SMA, and the exponential moving average of the EMA. And the thing with the moving averages, they're they're not particular bullish or bearish because they're just really average. So like I was saying, it's real easy to average. You just take the closing price of the last 20 days or whatever time frame, and you divide by that number. And like I think moving average is actually very easy to use. It's very easy to spot. Like for instance, if you spot a chart and you put the moving average on there and the prices are going down, that's easy to say that the downtrend because if you're taking a closing price and each closing price is getting lower and lower and lower, that's obviously going down in the trend. Whereas vice versa, if the closing price is getting higher and higher and higher, you see a upward slope. That's a hallmark of an uptrend. So again, I want to stress this with all types of technical analysis, pattern recognition. You're going to see the same things over and over and over. So when you technical trade, is really learn how to spot stuff. It's not necessarily being like a wise economic guy with all kind of numbers. You really just have to know how to spot stuff on the charts, and that's the biggest thing about like I say, the first part was the support and resistance. The second part was Japanese candlesticks. Third part is the SMA and EMA, the simple moving averages and the exponential moving averages. See, this is known as a price action trading, as you're trading following the price action. You're not really doing a fundamental analysis. You're just following the price on the chart. And again, as I said previous times through all my podcasts, That's the hallmark of technical analysis. You just follow the price. That's all you worry about is the chart. Worry about any outside noise. Do you use TA and moving average when trading in crypto? Yes, you do actually. See, it depends on the exchange because like certain exchanges, they don't allow you to day trade crypto. So you got to find a exchange that allows you to day trade crypto. Try Prime XBT, or you got Binance.us also. Yeah, I can't see your name. It just comes up as Facebook user. But whoever you are, TAs and technical analysis and moving averages, they go through all markets, stocks, forex, crypto, bonds, commodities, futures, in my opinion, that's why technical analysis is better than fundamental analysis. All right, I don't want. All right, let's not say, oh, for me, it's better for me because it's easier to use through all of them. Whereas fundamental analysis, it's really based on stocks. That's like where it's based at in commodities. But other markets, it's kind of harder to really use fundamental analysis. All right, no more questions. But yeah, what was I saying? Yeah, about the price action trading though. That's the same. That's basically the order of my podcast. I'm doing like real simple price action trading. Like I said, the first part was, oh, okay, Corey. Crypto is very volatile. Yes, it is. It's very volatile. That's why you got to use like certain indicators. You got to use like a real shorter time frame because you can always change the time frames of the EMA and the SMA. Like most trading software, they like 20, 50, 100 is the default. But with crypto, you can drop it down to 2 days, 4 days, 5 days. Because crypto is very volatile. But stick to something like Bitcoin slash USD because that's isn't as volatile as some of the smaller coins. But as I say, like an exchange like Prime XBT, that is a nice exchange. That's the exchange I actually use now because I trade my forex on there. I trade my Bitcoins on there, and I'm in the S&P 500 and the Dow 30. That's a real good exchange. And best thing about that, that have been going off. Yeah. All right. It's not saying name, so I can't see who that is. It just says Facebook user. Is that you again, Corey? But yeah, like I said, Prime XBT. Now the only it has certain people might find this be a downside. I think it's good. Like the only thing is that the currency is based in Bitcoin. So if Bitcoin goes up, that means your account balance goes up. Likewise, if Bitcoin goes down, your account balance goes down. But other than that, that's a real great exchange. The Bittrex. Yeah, I got off of Bittrex. I actually went to Binance.us. Yeah, Bittrex is safe. They actually been sending me stuff in my email to come back. Hey, you know what, Corey? We should do a podcast on crypto because I think a couple of people they want to know about crypto. We can do one on crypto. What are the best exchanges, the best coins to buy? But I want to finish this price action. This price action. Like if you was to go to Google and put in price action trading, you will see that everyone got their own price action trading system. And since they're all used basically the same technical indicators, I mean the technical analysis, most people's price action trading system is going to look exactly alike. So the one that I made up, I wouldn't say I made it up, but no, it's all right, Corey. It's all right. But the one that I picked these five different indicators. Someone else might pick three out of the five I use because, like as I say, it's based off of candlesticks, moving averages, support resistance, highs and lows. You got Bollinger Bands and pivot points. Those are like the six most common technical analysis. Well, also the ADX indicators and things like that. That'd be the next discussion. But I like to keep it real easy. Like the price action, just follow the price, like candlesticks. I tell anyone out there, you want to learn your Japanese candlesticks, learn the most common ones. Because, like I said before in previous podcasts, support and resistance and Japanese candlesticks, that right there, just knowing those two things can give you a real simple, basic entry exit point, a real basic trading plan, easy way to trade. You really don't have to go to school for this. You don't have to read all types of help books. You just got to study those Japanese candlesticks and support and resistance. That is basic price action trading at its easiest. Yeah, John, support the sticks. Yeah, that's basic at its easiest because it's like I think people, I I think people they try too hard when it comes to trading. They want to go to smart route. I mean, they want to go to quotation smart route, or they want to do it overly hard, and it's not really that hard. It's pattern recognition. Just study your candlestick, people. Support and resistance, highs and lows. Once you start spotting out on charts, I'm telling you, you'll start seeing a chart 5-10 minutes. You can get your whole day trading plan. Really don't have to go over that. Noise. Now, something else we want to go over in a couple shows, I'm gonna go over time frames. Now, I talk about the charts. Yeah, Bones, all day, every day. That's all we talked about, baby. Trade or die. But yeah, you talk about the charts. Now, me normally, whenever I trade, the best thing to do is go over the long term chart first, which is like the chart for the chart for the monthly chart or the yearly chart or the weekly chart. Because if you take a long term view of the market, you can see whatever long term trend is forming or which the long term trend is ending or whatever. Then now if you take the long term view, you come back down to the short term view. And that's something that a bunch of new traders really don't do. They just stay on one chart, which they just like. Even though I'm a day trader, I still start taking a long term view first. So you want to see just the flows of the market. Is it going up? Is it going down? Is it ranging? And after you get that down pat, then you can drop down to your day trading charts. So that's going to be the other part of the price action system, time frame analysis. But we're going to go over just the charts. You know, just the you got charts for the 5 minute, 10 minute, hourly, 4 hourly, daily, weekly, monthly, yearly. It's always good to check those at least two of those charts at all times. Like I say, one long term chart, one short term chart, and a chart that you want to make your trades off of. So it's actually three charts. What now? Again, that's how I was taught. Some people say two charts. Some people only use one. But I will always say it's better to have a long term view first before you drop down to your short term view. Because one thing you learn, don't ever go against the trend. That's like one of the trading basic terms. The trend is your friend. So you want to check the long term view to make sure it's not a long term trend and you're going against that long term trend. That's the easy way to lose your money. You might as well just take the money and just give it away. You're going against the long term trend. Yeah, so that's gonna be on our next episode. You know, it's a Friday night. We're gonna keep it short and sweet, people. You know, I'm not gonna ramble on like I normally do on a Friday night. Um, yeah, like I said, it's the easy one on moving averages. Like always, you want to like go Google this information, Google and go over this, or if you want to, just send me an inbox or email at trader.life@gmail. Like I say, so the next part we're gonna go over will be the time frame and analysis, like I just said, so you can know the long term view and the short term view. Other than that, people, Friday night, everybody go out there, have some fun, be safe, and remember, man, we gonna make it. You know, got some moves coming up in the next couple days, or I'm say weeks or so. Some more episodes, some more folks coming on, some more guests coming on my episodes, I should say. Waiting for this website to get done. I'm doing it myself, so it takes some time. Deal with the people. We gonna make it. You know, in the next couple of weeks, everyone out there, if y'all interested, we're gonna actually start live trading. I want to take people to like for forex broker. The reason I'm doing it with forex because the stock markets are closed at night when I do my live stream episodes, so we can't trade stocks. So forex, but the thing about this is, like I always say, technical analysis can be used in stocks and forex. So even though that you're you're you're, you're going to be learning how to trade forex, all the terms and indicators that you're using, you can use in stocks. So we're gonna try that in about a couple more weeks, like 2 more weeks or so. We're gonna open up forex practice accounts, and you trade with practice money. All right, people. It's your boy TRADEorDIE. Friday night. You guys have a good night out there. All right, holla. We gon' make it.